Hi, everyone, and welcome aboard. Thank you for joining me for Trading Buddies on this 15th day of January 2024. It's great to have your company, and I hope you have a wonderful experience in this next, well, it could be 40 minutes, it could be an hour. We shall see, it could be an hour and a quarter. We shall see what happens. Let's get stuck in, shall we? And have a look at what? Gold, huh? Hang on a second, I'll get a chart up. There we go. That one and that one. You should be now able to see my gold screen, and it's on a daily. We will go to an hourly and see if we can find a breakout for today. Got a range between the daily pivots and the monthly pivot. Not so bad because we can get our entry above there and we can get our entry below there. The only problem, of course, is we'll be slamming straight into the weekly pivot if we go short and that horizontal level there. So that's a little bit dicey. But what we might do is, well, I suppose the high is a little bit dicey as well, but it is with trend. So I suppose that's not the worst case scenario, is it? Not that fast, I've got to say. And we are range bound. No, I'm going to leave it alone again, guys. Monday doesn't seem to be the right day to be trading this as a breakout. Let's therefore go back and have a look at last week and see exactly how it would have panned out had we traded gold as a breakout. And I've got to say the market's not yet back in full swing, but I'm having a very, very boring old time of trying to find entries. Righto, let's look and see what would have happened. There's Friday, Thursday, Wednesday, Tuesday. Doesn't look good to me. Wednesday, Tuesday, Monday. So Monday, as it turns out, yeah, wouldn't have been good. You can see the reason that we didn't take last Monday's breakout because there was the range, pretty much, that we had to contend with. It wasn't the range that we would trade, right? But it was the range that I had to consider. So on the hourly chart, I can't remember exactly where our entry was. It was there. Was it not? 9 o'clock? That's 5 o'clock. 6, 7, 8, 9, 10. Okay, so our entry would have been there, trading straight into that low. We might have got a first take profit out of that, actually, which would have been a target. So it might have worked. This one, 9 o'clock bar, that's the 1500 bar. That's the 10 o'clock. That's the 9 o'clock. So he would have been taken into, it depends how this formed, I suppose. It's opened there. It's probably gone down. So you might have been taken into the short. Oh, sorry, it's opened there and gone down up. I don't know. Maybe it went up before it went down. Let's say you were taken into the long. You may have got a TP1, which is not a TP1. It's a target that we're looking for. If that's the range, yeah, I dare say you would have got a TP out of that one. 9 o'clock bar here. That's the 8. That's the 9. So there's your low. You wouldn't have been taken into the short. You would have been taken into the long, and you should have got your target there at DR1, one would have thought. So probably 3 winners there. I wasn't doing it, of course, so I can't tell you for exact certainty. There's the 9 o'clock bar. So here's your high of the range. Here's your low of the range here. And you would have been taken into the long. Dodgy. Not sure if we would have got DR1 there or not. Hard to say. You would have to tell me. And of course, Friday would have been a winner for sure. No question. So it wouldn't have been such a bad week. But Monday, I'm not a fan. I'm a bit like the Boomtown Rats. I don't like Mondays. And the pivots here, again, you've got a pivot sandwich and you've got the daily pivot in the middle of the weekly and the monthly. It means the market is potentially going to consolidate. So maybe tomorrow it would look much better as a breakout. So I'm going to leave gold alone again this Monday. If you want to follow that throughout the week, it may pay dividends, but not for me on Monday. Right, let's update a few things. Dollar versus the CAD. I have, for those of you who are in this, you would have been obviously in Trading Buddies the week before Christmas, or maybe a couple of weeks before Christmas. When did I get into this? We were in the short, you'll recall, twice. We got in here, we got in here, we got out here, and we got back in here in the long. So that was 1, 2, 3 weeks ago, triggered a fortnight ago. Where are we? Just after Christmas. So what I've done, we've taken first profit, of course. I've now moved my stop loss up to underneath last week's bar or last week's candle, which is underneath the monthly pivot and the two pivots which have now switched above the monthly. That's encouraging for the buyers here, and I am encouraged by that. What I haven't seen is a pullback yet to the significant pivot, which is the monthly. That could, of course, happen. What, we've got 16 days left in the month, for goodness sake. So it's not urgent. The one thing that does look, or the other thing that does look good, would look good if it were to happen today, would be, if I go down a time frame or two, would be if this candle here actually produced the goods. It has rejected the daily pivot. It has rejected the weekly pivot, or closed above the weekly pivot. Looks like it wants to go on. This scenario here doesn't encourage me, however. This is very much a wedge top, which suggests to me at some stage this is going to disappear in that direction. Now, that some stage could be any old time, but I'm hoping that it's well beyond when we get up to, pardon me, the top of that range again. I call that a range. Let's have a little bit of fun with this, and let's go up to there, and say we'd be happy if price got to there and then we looked to short it. I don't see that happening, to be fair. The next port of call to me looks to be around about there, which was the breakout area when we were trading short. So I think this confluence here makes perfect sense to me. And if I drag this down from here, it's not far away from there either. So that's the area of interest where I'd look to be taking some more profit or even exiting the trade. We'll see. That's dollar CAD, nothing to do. The other one that we've been in for a little while is Aussie yen, and we're still in drawdown on Aussie yen. Last, what was that? Wednesday. Wasn't such a great day for Aussie yen, and can't remember why. Oh, Aussie numbers came out, that's right. And surprisingly, CPI figure was, in my book, not a great number for the Aussie, yet it smashed through this resistance area. We've since come off that, maybe because of the situation that we're now faced in the Middle East, which, of course, has gone through an escalation period. I can't really get a good read on that, whether it's so dangerous, I'll put it that way, on a global scale, that it is going to force the market into a risk-off situation. If that is the case, then Aussie yen is one of those currency pairs that I would want to be entertaining short, and we are already short, so I've got no problem with that. Is the market going to go risk-off entirely? I don't know, to be fair. I'm no economist, I'm no fundamentalist, but there is that little niggle in the air that suggests that we are possibly going risk-off if this escalation in the Middle East, Red Sea, and we've also got an issue with, I believe, the Panama Canal, which is going through a drought period, and that could well put a bit of a press or a squeeze on all the transport that goes through there. So that could mean supply issues. We've been through that supply issue for far too long now. And that was one of the major reasons that we've seen inflation. Sorry, one of the reasons that we've seen inflation go gangbusters over the last couple of years. If that were to be the case, then again, I would suspect that we're probably going to see the Aussie come down a little bit. Maybe the yen increase, not too sure about that one, but I'm happy with the position, and I don't really see this being a dangerous situation until we get above this high. And if we do get above this high and we close above this high, then I think we've got a problem. But I don't see that happening anytime soon. Weekly game changer bars, the whole lot of them. I'm going to go through the whole lot in one fell swoop because there's one only. It's Kiwi versus the Swissy. Barely qualifies, I've got to say, because last week's candle, although it did have a low lower than the previous, which of course is part one of the criteria, it did come off its high as well. So really a spinning top situation there, not a decisive bar, but it did close close enough to its high for me to qualify it as a game changer bar. Do like the fact that we've got a double bottom here. Do like the fact that we've got another double bottom sitting here at the bottom of our rectangle and range. But just like last week, when this was my chart of the week, in fact, it wasn't a game changer, but it was a chart of the week, I was looking for a false break of that trade line. Didn't happen. We just cuddled it like a teddy bear, really, and absolutely nothing happened at the end of the day or the end of the week. We just hugged that and hugged it and hugged it. Exactly the same analysis this week. If price were to come down here now, even better if it took out those lows and then shot straight back into that range, I'd be looking to trade it long again. But at the moment, I don't see a trade, but the weekly chart is telling me that this may well be a buying situation. Now, I hasten to add that when you're trading game changer bars, they have to be in agreement with the main theme. What's the main theme? I call it the big boss. And the big boss is really what's driving the chart. And what's driving this chart, to my way of thinking, is not anything that's bullish. In fact, you would have to concede that this is in a dreadful and sustained downturn. I think there's a head and shoulders or a double top up here somewhere behind my panel. That really is the driver of the market at the moment, and it just continues. Every time it puts in a reversal bar, it seems to sell off. And we don't have a reversal bar right now, but we do have one going in the opposite direction. I can't trade that because it's not in agreement with the major theme or the big boss. So that's not a consideration, but on the daily chart, as I say, that false break may well give us an entry and a buy. All the Swissy pairs are very much in the same boat, CAD Swiss in particular, that we've been trying to get hold of for the last goodness knows how long, is looking once again a candidate, as it has this lovely tweezer bottom sitting here. Where, though? It's kind of hanging in nowhere. I don't see any strong support level through there at all. We're down at all-time lows, but it is a little bit of a precursor, in my humble opinion, of what may happen next. So I'm expecting upside. I'm expecting that breakout area to be retested at some stage. Hasn't done that yet. So I am cognizant of looking for maybe a false break of that support level on CAD versus the Swissy. So same applies. If we can break this down, get underneath it, back above it and retest, then I'll look to buy it, getting some profit in the bank before those highs. There are probably, I don't know, 3 or 4 that stand out to me this week as possibilities, not as potential or not as trades at this point in time. Aussie Swissy's one, but I've got to put the caveat on this and a lot of these pairs on market sentiment, because market sentiment is going to be a very, very big factor in Aussie versus the Swissy. By definition, one is a risk-on currency, one is a risk-off currency. I see exactly the same thing here as I saw on Kiwi Swissy, with the double bottom sitting here. Potential for this to be a higher low, yet it's not at this point. Waiting for a smaller time frame, false break of resistance again, or even a rejection bar of some level that I really can't see here, or we get a triple bottom, or we go short again. I'm not in favour of either of those scenarios unless the market does go risk off. If the market does go risk off, then we're getting new lows on Aussie Swissy. I've got no doubt about that. Same could be said of Aussie versus the dollar. There's a few of these popping up, and I just want to point them out to you. I showed you a rising wedge before. This one's doing pretty much the opposite of that. You can even take it from there. The problem I've got right now is it's at the top of that. Now, these tend to break to the high side. So we're looking for this to break out to the high side. If I were to get a higher low in here, in particular, at a strong support level, which maybe is there, I could look to buy it. There's probably another little level in there as well. It's not as strong, but there it is. So if I got a rejection bar of that, I could probably buy it anticipating the breakout. Much prefer to be trading from down here if I'm to go long, however. Can I trade it as a lower high? Hell, I can, absolutely. So if I got that signal as well, I could trade it short to get long at some stage. But there's a hell of a gap there if it does go through these support levels. That's absolutely typical of what I'm seeing in the market at the moment. I'm seeing these wedge patterns at the top of currency pairs. Kiwi versus the dollar, it's exactly the same. I can take that pretty much exactly as I drew it on Aussie versus the Swiss index, exactly the same thing. And we're at again, that resistance level. So lower high maybe comes into play at some stage to play the range, or a higher low to anticipate the breakout. So I'm not committed in either of those directions, but again, this will depend a lot on market sentiment. So I've got to get a good read on market sentiment to be able to trade these things. I'm going to give my final analysis today to the currency pair I hate the most, and it is dollar versus the yen. And the reason I have to look at this is because I've got this classic double top sitting here on the weekly chart, and I've got this potential lower high. Already I've got a potential lower high, but I was going to swear, it's not a nice candle to be looking to trade. Again, a spinning top, which is an indecisive signal in the market. So I'd much prefer to see this come to here, then give me a reversal bar, and then I could look to trade it short. When I look at this from another perspective, I also see this as a potential head and shoulders. And if that's the case, then this area does look particularly nice to me, around about the 148.70 mark. So can I trade this long to get short? Of course I can. But it's not there as a setup at the moment. What I'd need to see for that to occur would be I've got a bit of a base here, so a higher low in here somewhere would make sense, maybe at that level. So if price were to come down there, give me a reversal bar, I'd be happy with that. I'd also be happy with a false break of support. I don't have any support there in terms of a trade line at the moment. But what I do have is a resistance trade line. It needs to break, take out this high, then retest that before I could trade it long, however. So dollar yen may well be the one I'm looking for later in the week. I'd be happy to see this go there without me, so I could look for the short. Going back to one of the things I first said, this is a week where we may well see the market, if it is in flux at the moment, we may well see the market go into a forced, if you like, market sentiment situation. And that, to my way of thinking, should be risk off. We will see. How you doing, Ash?
I'm doing all right, mate. I'm doing all right. Yeah.
Got anything clearer than I have at the moment?
Well, do you know what? I think that listening to your analysis, what really kind of stands out to me, and it's that I'm in the same kind of boat as you are in a lot of ways. That I think the clarity actually comes from the fact that the market is displaying a lack of clarity. It's it is there really is kind of very little. That camera on me. There is very little kind of information which kind of gets us confident, and I think it's because there are kind of conflicting forces kind of driving things. I've looking at gold as an example. We see, I mean, you've kind of pointed out this triple top, which looks like it's going to become a quadruple top up at these levels, and it really, I think that there's enough information here to suggest that we could see a decent push to the downside, we can see that it's probably in overbought territory, you know, when we look at this on the monthly chart. So longer term timeframes are suggesting that gold is toppy. You know, this is the monthly chart. This is toppy up here, but as you quite rightly say, you know, there's so much kind of concern in the world right now, in the globe. There is a bit of a push for some protection, and gold is an obvious kind of answer to that. The other thing, of course, is that with the 10-year yield now pushing to the downside, and this is where it all gets quite difficult, because the US is kind of showing that they are probably going to avoid recession, but it is a probably rather than a definitely. They're probably going to kind of avoid recession. We're seeing sort of like numbers that are turning around, which is suggesting that inflation is starting to regress. But as it's regressing, it's not aggressively showing that the market is starting to cut back on things like the jobs market and things like that. And that's really been the theme for the last 2 years. You know, as we've seen inflation go, you know, pop to the upside and start to come back down again, the jobs market has remained relatively robust, supposedly. You know, on the surface it has. I think there's some underlying kind of signs which suggest something different. But we had the inverted yield curve, which we know also indicates recession. That really hasn't yet, if it's going to at all, that really hasn't yet kind of like taken a stranglehold on the market. So again, kind of questions, you know, that there are these underlying kind of things that are not yet satisfied before that I think market participants can go, right, this is a bull run. We're ready. We're really ready to go. There are signals that if the Federal Reserve reduce interest rates, the Bank of England will probably follow suit, as will the ECB, then stocks will probably push higher. But that doesn't necessarily reflect what's going on with the underlying economy. Then we've got these kind of forces like the elections, you know, that we're looking at this year. So, you know, Trump is looking more and more likely to kind of step back into power. That tends to be good for the market. We certainly saw the last time round. You know, Trump manages to kind of push a very dovish, you know, Fed position, and Jerome Powell was in charge last time out, and he listened to Trump. So if the market conditions allow, then you could see that kind of starting to put a bit of a firework under the markets as well. We've got the UK elections as well this year, and the UK economy is turning around. You know, we had a big problem with housing. Housing numbers this morning have come out from Rightmove, and they are suggesting a hold on a minute, where's that disappeared to? Rightmove house price index. So it's gone from minus 1.9% up to 1.3%. So far, you know, for the most recent month-on-month number, and the housing market looks like we might be getting this kind of like almost like the correction's done. You know, and this is another indication that there could be that soft landing. You know, we were expecting lots of unemployment. We were expecting house prices to really, you know, plummet really, and they haven't. They've come down. They've eased to the downside, and I think that's global as well. They've eased the downside, but they haven't plummeted, and that sets us up for a minor kind of correction, really down, and then a trampoline back to the upside, just a you know, a really aggressive bounce long again, which really kind of puts the market in this situation where there is this kind of pressure point, and if they could satisfy what's going on in the Middle East and a little bit to a degree what's going on in the Ukraine, that would be enough, you know, to see the markets just take off. And I think people are kind of, you know, they're looking at that situation. They're thinking, well, I don't really want to miss out on this. So they continue to kind of push things to the upside. We see the NASDAQ really kind of, you know, that this thing's going nowhere. It's now at all-time highs. It just nicked into all-time highs. It attempted to push to the downside. It's back up again. Dip buyers keep coming in. You know, we see it time and time again. They came in here. They keep coming in, and every spike to the downside, they're buying the Nasdaq up again. Same things going on with the S&P. Not the same with the FTSE, but these are kind of much better reflections of really what's going on with global sentiment. gaps all over the place as well that you know, again, need to be satisfied at some point. But there's this strange kind of dynamic, I think, for a January. It's a strange January, really, mate, where we're just seeing a lack of conviction either way in some respects. You know, it's like the market wants to go, but it can't really go because there are these underlying forces that are suggesting things could still really turn out badly if the situation in the Middle East doesn't sort itself out, and the situation in Ukraine doesn't sort itself out a little bit more this year. That still kind of puts the inflation question back in the forefront. We've seen inflation numbers over the last couple of weeks tick slightly higher. You know, they haven't been sort of like, you know, continuing to the downside. We're sitting around about 3 to 4% globally. And will they stay in this band for a little while? Does that put central banks a little bit further out this year to be lowering interest rates, which is the market expectation? So I'm with you, mate. I think the lack of clarity gives us clarity, i.e., any trades right now, don't expect them to go anywhere. You know, expect them to reverse maybe next week or the week after, or even the next day. You know, it's just, well, I don't think we're looking at strong trends at this particular stage.
Now, you've seen me ducking towards my chart patterns, right, where I've got my market structures well and truly in place, because I agree with you. Once it hits resistance, I think it's headed back to support, no matter what it is at the moment.
Yeah, absolutely. So, I mean, that kind of suggests that gold is a sell at this particular point. You know, when you look at gold on the dailies, we are sat right on top of this trend line here. So,
you know, for the first time in months, maybe years now, I've got a doubt about this now, about this triple top.
Yeah.
I don't know if you recall, but it was probably towards maybe this time last year or towards the middle of last year. I was listening to a commentator, and I can't remember who it was or whatever, but he made a very valid point. And it was, remember I spoke about the gold is very good at breaking out on the fourth attempt?
Yes.
You remember that? We went through that, and we went through the charts and proved that had some sort of proof to it.
Yeah,
if you like. Well, here we are. This is the fourth one.
Yeah.
So I've just got that little bit of niggle saying, "Oh, maybe this goes." I mean, I don't want to trade it where it is, but certainly not.
Well,
as you're pointing out, we're not in a buy zone right now.
No, we're not in a buy zone, but we've got this kind of this symmetrical triangle kind of situation going on, which probably is if we were to measure that out, it probably does push gold. Well, let's have a look actually, rather than speculating on a price point. But if I can grab it, I might not be able to grab that one. That might have been a bad. It might be a badly drawn one. There it is. I can see it now. It's about there. Well, depending on where it goes. So around about 2.5. So 2,250. And we're currently sat at 2. So there is a potential for a 10% run to the upside in gold. And probably pretty quickly, I would have thought as well. I mean, we're talking about the next 12 months when I say pretty quickly. So over the next 12 months, a kind of 10% pop in gold is well and truly on, really, because gold is the inflation hedge. We know that, and inflation is sticking around. You know, we've got this kind of like situation, as I say, 3 to 4% mark. You know, where we're kind of sitting in between 3 to 4%. You know, something's going to slightly dip below, something's going to slightly be above that, but it's around about that kind of mark. So that is a good environment for gold. Plus, inflation is coming down, so the 10-year yield is, you know, the yields are starting to come to the, you know, pop to the downside as well. Another really good environment for gold. So the fundamentals look pretty good. We saw a lot of buying from central banks over the course of the last 24 months. You know, so we know that there is interest in this particular commodity. So there are probably indications that this is one to look out for, and because it's one to look out for, really. The more interesting.
Before you get rid of that one, sorry. I don't want to interrupt you, but I wanted you to duplicate that line and put it on the other side.
This line here, or the measured move?
The support one, that one.
Yep. Put it on the other side. What do you mean?
Put a channel in there
Oh,
from
I
the
see what you
previous
mean.
high. Yeah.
Yep. Okay.
Yeah. No,
Stop.
where you were is fine for me.
This one here.
Right there. Yep.
Yeah. I suppose a little bit of a false break there.
Yep.
Yeah.
That brings that into play for me. 2100.
Yeah, well, that doesn't. Do you know what? And where that becomes interesting is that a break above this level then gives it enough room to kind of,
Yep.
maybe get in, so it doesn't look so toppy. If that channel's in line, breaking through the monthly pivot is probably going to be a bit of a trigger for a lot of people. And this is the thing, isn't it? If we're looking at gold and sort of like, what's going on technically with gold, what we've got is this this monthly pivot kind of holding things in place, and we've got this trend line. What is it that kind of like encourages some more buying? And it's probably a break of this high here at 2062 on the futures, and a break of the monthly pivot. A break and retest of this area. This is going to be a battleground, I would suspect. If it manages to break out and comes back, that's going to be the battleground that the bulls are going to want to protect, and the bears are want to try and going to try and want to get back under. And that particular point there, whether it holds or not, and whether it holds or not will probably be technical to start with, but whether it then starts to flush to the upside, it's probably then going to be about market dynamics. The first thing is probably going to be a technical area, but then as things kind of progress in the Middle East, as things kind of progress with inflation numbers, as things progress with central bank sentiment, that's probably going to be the ultimate driver, that the fundamentals will ultimately kind of take over into what happens with gold. Very, very difficult to make a case for the downside, it has to be said. The technical area at this stage is toppy because it's under a resistance point, but that resistance point breaks and becomes a support level, then the technical area becomes of interest. So gold seems to be one to watch. Oil seems to be one to watch as well. And it's a fascinating thing going on with oil, really, because we've got this situation where we are kind of getting some weaker numbers from China specifically, and possibly then they start to kind of come through into the US as well. That would suggest some downside, further downside for oil. But look where it is. I mean, it's a very, very strong support. We're looking at support that has been in existence for nearly 3 years now. So this is it could even be there. So we are basically in and around, within, if we go from that point down to that point, that is well, actually it's still I suppose if you were trading that on the short term, that's still quite a big jump to the downside. It's around about another $10 down. But there is this whole area really is the lower end of this market on oil, and if things start to kind of change, they resolve the situation. They don't resolve the situation in the Middle East, and maybe we also start to see a bit of a pickup in the market. Which could also happen, two separate things could happen at the same time. Then we start to see oil go to the upside as well. So oil's an interesting commodity, but I'll tell you the one I think is the most interesting, mate.
Hang on, before you leave there, I think you can probably see around about 80, what is it, 83, 80?
Yep.
Yeah, there, right there. I think you can probably see that going back to there, can't you? It'll give you a lovely little right shoulder, wouldn't
it? If it popped up there, it would give us a right shoulder. Absolutely right. Yes. Yeah. Well, I mean, and it does look like if you kind of consider this particular time frame here, this is 30 weeks and nearly sort of 6 months more than 6 months of fluctuations between these two levels. So we could be headed for another. I mean, we're only really a month and a bit in. So we could be headed for another kind of 4 or 5 months where oil just kind of messes around in this area. So yeah, popping up to 80 and then maybe back down again, and then possibly breaking. And where this would become quite interesting, it wouldn't be long enough actually, but where this would become interesting is that oil is becoming markedly unloved as an energy source. Ever since Russia kind of invaded Ukraine, and really over the last year, I think the environmental change has probably been maybe more significant, or it's certainly been more reported than ever before, where people are kind of even more worried about rising sea levels, and the huge swings in temperatures. So
The will's
inevitably,
there, but we've got to stop driving cars. We've got to stop flying in planes. We've got to stop doing a whole bunch of other things before oil comes into an oversupply situation, I would have thought.
I agree with you, except for the big push, as we both know, for uranium. And there are, and there's a huge push for it. It's not just a small kind of, maybe we'll think about it. That there are kind of things coming online. The US is potentially going to pass some sort of bill. I wonder whether that changes with Trump. That's a kind of a possible kind of change in dynamic. But it looks to me like there is certainly some oil and fossil fuels are lacking a bit of love right now. Now
Did
that's
you
a
look at your
long.
Did you look at your charts today? The Aussie stock market.
Yes, I do
Hmm.
have a look, mate, and
Wow.
yeah, I mean, uranium is up at what
Yeah,
a buck five
well,
or something.
it was $104 on Friday. I don't know what I haven't had a look today.
No, I haven't seen it today either, but it's just taking off. I mean, it's just kind of it's going and going and going, and of course that's way before the actual value of the commodity has really kind of taken hold. So we've just had this kind of perfect storm, really, where we've got this environmental situation, we've got this problem with Russia. I mean, that's a big thing as well. We got this problem with Russia with energy, and actually it's still a problem because they actually control quite a lot of the uranium market as well. But we've got all these kind of issues that are going around. And then we've got bills getting passed in the United States to kind of, fire up the production of uranium, and we've got things going on in the UK that are saying the same thing. There are all these things coming online. COP28, was it 25 countries signed up
Yep,
to kind
21,
of
I think, but yeah.
21? Okay, so we're looking at a huge percentage of the countries that are saying, okay, let's get back into this resource. So uranium prices just kind of is rocketing to the upside, and ultimately that puts pressure on oil. Ultimately, now I'm not saying that that's happening today, but ultimately that's what's going to happen, because that's what we're looking at. We're looking at replacing oil for a different commodity,
Don't
and
know
there
if
might.
we've lost Ash or whether we've lost me. If somebody could.
Oh, might be me. Is it me? You guys hear me, or did you hear Jeff?
I was doing the same. I can hear
Oh,
you
you're
now.
back? Okay, mate, cool.
I think that's my
Um,
internet connection. Yeah.
all right, fine. Well, yeah. So ultimately, that's really what's going on with oil. It's going to have another battle. It's got another battle on its hands. It's not just about the dynamic of what's going on economically globally. It's also got another. I guess it's kind of it's the battle of the monarchs, isn't it? There might be kind of the king is dead, long live the king, when it comes down to oil versus uranium. And as I say, that's probably not going to come into hold until maybe 27, 2020, 2030. I don't know, but that's still something to kind of have at the back of everybody's minds. I think we still need kind of oil in the market as well. So that it might be early, but it's becoming quite unloved. But as I say, mate, the big one for me is silver. And the reason I think silver is the more interesting play than gold is that it kind of holds that precious metal aspect to it. So it kind of like, it gives us that potential protection. Look at that inverted head and shoulders. It look, really kind of really standing
Mm-hmm.
out, that one. So we got possibly some kind of indication here that we've got a pattern which could also come into play, which I will quickly if I can. There we go. Just so
Hope you
everybody can
guys were
see it.
listening to us all last year talking about uranium as well, because it's really done what we anticipated it would do.
Yeah, absolutely, mate. And I think I mean, you've been really, on top of that story. I think more than anybody, really that I've really spoke to. So, and you called a great trade a couple of weeks ago as well. So, I think there is probably some further room as well to run in the uranium market. It's difficult, isn't it? Because uranium has just taken off and the stocks have just taken off to a point where if you were trading anything on MT4 like it, you'd be getting out because you're just like, what this thing has done, it's gapping all over the place, it's kind of going. But because the fundamentals for uranium are so strong right now, and it's come down such a long way, that it was so unloved after Fukushima and right up until really last year. All of a sudden, the dynamics have changed massively, and even though the market is overbought in on every single indication, the fundamentals aren't. The fundamentals still suggest that this thing's got still a long way to go. I think it would be a brave person to sort of get in at the current chart patterns. But I still think if you did get in with a buy and hold kind of strategy, you'd still be okay. I still think you'd probably make a whole bunch of cash.
Yes, last week or so, had I adopted the buy and hold principle rather than the trading principle, would have done a whole lot better than I did do, because I closed half my position on one of the miners that just went at ape shit in the last
Yeah,
week or so.
yeah,
Perfect exit, not even, well,
yeah.
it wasn't an exit. I only sold half the stocks, but I've lost a bunch. Well, I didn't lose it, but I haven't made a bunch of cash on the back of that. So
Yeah.
buy and hold would certainly have been the way to go in the last couple of weeks.
Yeah, and I'm looking at this thing and thinking, I wonder whether that's going to be the strategy for the year. We've seen this time and time again, where the main kind of story, and sorry to go off point for everybody in the room that we're not talking about stuff on MT4, but this is the interesting thing about the market, and this is why I think this show is kind of really what Jeff and I always try and bring is maybe something that is off and outside what
Yeah,
we're looking
different
at with
points of view.
MT4.
Absolutely.
Yeah, because 2 years ago, we introduced Shukri to everybody, and Shukri kind of gave us. I think it was about 2 years ago anyway, maybe three. But Shukri kind of gave us this open look into the crypto market. And we know what happened with cryptocurrencies over a 12-month period. They just went parabolic. And I'm wondering, when I'm looking at uranium, I'm wondering whether we've got a similar situation. Nobody thinks that stocks can do the same thing as cryptocurrencies, but why not? We've got this kind of sector which is just blowing up all over the place. Sorry for the term, but it's kind of it's rocketing to the upside all over the place, and we've got the fundamentals which are really supportive of more upside, and we've got a situation where we're nowhere near the 2007 levels before Fukushima, and really that was the main driver. I mean, 2007 is right, isn't it, mate? That's Fukushima disaster.
Yeah, I can't remember the exact date of Fukushima, but the interesting part about Fukushima, I said this a couple of weeks ago in another show, people were freaked out by Fukushima, and the uranium price went from $140 down to virtually nothing
Yeah.
at the end, not long after that. You know how many people died as a result of Fukushima?
Oh, it was handfuls, wasn't it?
One.
One. Yeah, not even a handful.
One person. You know how many people died in coal mines, oil fields, and gas fields at the same time?
Yeah,
Thousands.
yeah,
Yet we're so worried about uranium,
yes,
and
yes,
that's now being, I suppose, the education side of that is coming out. But the major thing that is going to keep the uranium stock price high is lack of supply.
yes.
because you've got a very, 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 very small supply at current demand levels.
Yes.
Yet the demand is going exponential.
Yeah.
The supply can't keep up with it in the short term or the medium term. So it's going to be a long-term process.
Yeah.
So, yeah.
Sorry, mate. Just to correct myself, Fukushima was 2011, March
11,
2011. And now the interesting thing with that is that, as I say, if you look at the price of some of these uranium stocks, they are probably 3 or 4 times under their price point before the Fukushima disaster. And that's Fukushima. So that in itself to me sort of like suggests a potential target. Looking at what the way things were before that. But I've got to be honest, I think that's just the kind of fair value price. If you like, it's sort of like the midpoint price. I think that it could go double that potentially, maybe even quadruple that price over the course of the next 20 to 30 years. Because if it does kind of like take the place of oil, and we know that kind of solar and wind does not produce enough energy at this stage, it seems to me like it may well be the only kind of a singer in the competition. It's sort of like I don't know of any other commodity right now which is as hot. Now, my point with that is that we've seen it with cryptos. A couple of years ago, 2-3 years ago, we brought Shukri in. Shukri kind of exposed us all to kind of like the potential for crypto markets. The crypto market over that 12-month period, over a 12-month period, went up by 10-20 times, in many respects. Have we got the same situation with this particular thing now? I don't know. With some of those stocks, could they go up 5 to 10 times? Probably. That's what I'm wondering. So even though the buy and hold situation seems like it was a mistake, maybe not doing it, if you look at it today, I think it could be even more magnified in 12 months time. I wonder whether if we
I'm pretty confident, mate. Yeah.
Yeah, so we come back in 12 months. So anyway, that's just to kind of bring it into everybody's thinking. And it's a shame we can't really kind of trade uranium on MT4, isn't it? And I don't see why we shouldn't be able to. We've got a load of other commodities, so maybe uranium comes in eventually.
I don't know. I don't care at the end of the day.
No, there are plenty of ways to get exposure.
There are. Speaking of exposure, we haven't exposed George for 2024
is George
yet.
in? Sorry,
yes,
mate,
he
I
is.
didn't realise.
Yeah, he's here. But we've been having such a conversation about my favourite subject at the moment. I couldn't really say no. G'day, mate. Happy New Year.
Happy New Year, gents. How are you doing?
Hi, mate. Sorry to hold you up. I was on a bit of a flow there.
No. It was enlightening stuff as usual.
Well, yeah, I mean, yeah, Jeff enlightened me, but I've just been looking into it even more, and it is quite an exciting market.
Yeah, I know it is. I mean, if you are looking at trading these higher time frame charts and looking at fundamentals, you have to stay on top of these things, right?
Yeah, we do, mate. And do you know what? Actually, that kind of brings me to the question to you. Actually, talking about the higher time frames, Jeff and I are both kind of pointing at this market and thinking, okay, well, it's the lack of clarity gives us clarity that the market doesn't seem to really know which way to go. Is it the same when you look at short-term timeframes, or because they are shorter terms, you can still get decent runs, decent trends, or are you finding this year so far actually more of a challenge than normal?
Well, this is my 4th day back in the market.
Okay.
But I've had a look at the charts, and there is opportunity still within the market. Okay. And the way I look at it is when I turn up into the market, in spite of what I see even on a daily time frame, I don't know what's going to happen. I mean, today is interesting enough, first day of my daughter in high school, so we dropped her off, and then my wife said, "Okay, so you're coming in late as usual." I said, "No, today is actually a holiday in the States, Martin Luther King Day." So when that afternoon session, the first couple of hours of the US markets, I'm not going to bother doing that because they're going to be closed. But then I said, actually, in reality, it's a fact, it's a holiday, but it actually means nothing because the markets can just move when they move, you know?
Yeah. Yeah.
So I came in, if you look at the past couple of years on this holiday, like on the DAX and the FTSE is quite ranging quite a bit. But I came in and right now I'm even looking at it, the market is kind of tracking downwards. Nothing has set up. But I don't know if we're going to kick into a range or it's going to create something that you can trade. So, to answer your question, on a daily chart, when you look at the daily charts, like, my goodness, what is happening? But that, my goodness, what is happening is opportunities to some extent on the 5-minute, right? It doesn't mean that every day you're going to get these easy setups. It's pretty easy to come in and then do nothing or, hit your daily drawdown limits pretty quickly. And then what you do, you get out and wait and come back again the next day. So, I mean, this is the FTSE. If you put it down to the 5-minute, you will see. You can also start to see there. So, since the open, bulls tried to push up quite a little bit. Four candles failed, and then just a pretty dramatic sell-off actually. Now, I would be looking to say, well, if I get out of when that last big red candle occurred, which was breaking out beneath the open, I was hoping to get a follow through of that candle, that fourth red candle.
This one here?
So, yeah. So, I mean, we're breaking out beneath the low of the first candle, right? So if I had a second follow through candle, then I'm interested to be looking for shorts, but it's failed immediately. So I've got to sit back and say, well, maybe we end up with a double bottom at some point, or, we might come back again, with a lower high double top at some point. Will that happen on a day like this with the US markets closed? Maybe, maybe not. There's not enough volumes. But that chart pattern is a pretty good chart pattern when the US is closed, just from when it opened.
Yeah.
In terms of showing the volumes. So
break through that particular point. I mean, it looks really clear now, doesn't it? I mean, it's probably around there, or yeah.
Or you could end up with where that line you've just drawn started. The market could just end up in that for the rest of the day. Well, you don't want to be in that,
Yeah.
It's so. Yeah, I mean, to your question, when you come to the 5-minute time frame, you try not to get governed by the high time frames.
Yeah.
That's something that I really try to do, to say, okay, let's look at the market from when the exchange is open and see what it gives us. It ends up as a trading range day on the daily. It might have a decent swing up and swing down. And maybe you could have capitalized on that. So, that's kind of, I mean, like today, I don't know what's going to happen. We already, 50 minutes into the market, and save for that move on FTSE, there's nothing else that seems to have moved quite radically since the open. Even if you look at some currencies, with Aussie CAD, trading range, pound, trading range. Euro New Zealand had a bit of a bullish rally, in the last part of the Asian session. Yeah, so it's a bit of waiting game actually today.
Yeah.
So far.
Yeah.
Yeah.
Have you got a top of the pops watch list, George? What's the best one, or is it just wait and see for everything?
It's gonna. I mean, right now I'm just looking at DAX and FTSE, and also the pound. That's all I'm looking. Well, let me say that's not all I'm looking at. Those are like top of my list to see if any move occurs out of that.
Actually, Ash, pound. You were saying earlier that the UK was looking a little bit better than you were expecting it. to be the
Oh,
case.
yeah, it's really surprising, mate. What's going on really with the UK? We had GDP numbers last week, which actually were better than expected. Rightmove house price index has come out today, and it's better than expected, and or well, better than previous, I should say. And we've, prior to the number today, actually today's number is the best number that we've seen for around about 6, 7, 8 months. It was a really, really good pop to the upside, and January can be a little bit tepid. It's a bit mixed, I suppose, but it was a decent pop to the upside, and I think that there are quite a few commentators that are suggesting that the housing market could do a lot better than they initially thought because of potentially, the interest rates starting to recede a little bit, and we don't know really kind of like what's going to go on with the interest rate, because the inflation data, if you were to just state what the inflation numbers were, which is kind of near 4% in the UK, if you were to state that, that would seem very, very high. But when you kind of consider that they were, beyond 10, then they start to look a lot more attractive. So the perception really right now is that the interest rates are going to start to drop, which then kind of like puts people towards the housing market. We've had wage growth in this country as well. So as long as interest rates come down, actually we could get a bit of a boom period in the UK.
Yeah, Burnley question that one. So George, back to you. Did you have a bias for the pound?
No, not a bias in terms of long or short, but I think, because of kind of the fundamentals that Ash is now unpacking, I'm expecting there to be a lot more momentum in the market today. I mean, we've already had that move you saw that you can see on the chart there, that bullish move.
Yeah.
If we're gonna get back to the high of today as it stands already, and we come off a decent enough like double bottom or something, that would be quite nice to give a decent kind of return. So I'm watching now to see if I'm gonna get a double bottom in this session, and hopefully the market trying to accelerate up again. That's kind of what I'm looking at. I mean, beneath
right.
that, what time was that candle? That green.
This one.
It's actually the opening candle, right?
Yeah, the open.
When I say open, the candle when the market opened. So if those bulls come back and force a double bottom, then the play that happened in the Asian session will still be strong enough, because it will be a higher low from that bull rally. From about, if you look at 305 MT4 there. So.
Well, you just poured water. Both of you just poured water on my parade, because wow. In my analysis this week, I was struggling, as I said before, to find something that I could get my teeth into, and could only come up with, I suppose, 3 or 4 different chart patterns that are going to give me at least some support and resistance to trade off. But I then went and had a look at all the currency indexes, a la Lloyd's scenario that he does each and every week. And I found, once again, that it was very, very difficult to say, okay, that's bullish or that's bearish, or gee, I really like that for upside, or I like that for downside. But my conclusion was that the yen was in the best position to buy in terms of buy zone, and the pound was in the best position to sell on the indexes. So I thought pound yen might be a nice short. Yet I can't see a setup for that.
So just to talk about that for a few seconds. You are looking off the daily and weekly, right?
Yes, mate. Yep.
Okay. So I mean,
getting the bias from the weekly.
Yeah. So in terms of bias and everything, there's no ways I can have anything to challenge that. So if you think, let's say, pound could be bearish this week, now intraday on the 5-minute, if I get that double bottom and the acceleration up to test the high of the day, that for me, depending when it occurs, it would be sufficient as a potential opportunity to trade. if then when it gets to the high of today, I'm looking at the daily chart now. And if you popped up the daily Ash on the pound, if we get back to that high of the day, then we're testing, in the range of the high of the doji high of the previous day. We could come back and sell off again. So tomorrow, for me, the pound might end up being one to short.
Yeah, sure.
When it then comes into your bias, if that kind of makes sense.
Oh, absolutely. And I think, we've been saying that for a few weeks now, given that we've had a break. We were both, Ash and I were both of the opinion that the daily charts or end of day charts and even the weekly charts that I trade were very, very difficult. But they were delivering biases which could then be traded on smaller timeframes. And we both were of the opinion that the smaller timeframes would produce A, more opportunity, and B, probably better trades. And that's what you were saying.
Yes. So if someone is following the higher level daily, weekly bias and say, okay, I want to use that to trade, then as far as this chart is concerned, they wouldn't worry about trying to find a rally back to test the high of today.
Sure.
They're just going to have to wait and say, okay, if the market gets back to here, I'm going to see if it creates a double top or some kind of reversal pattern for me to short.
Yep.
I mean,
So
do you know what's
take
interesting?
a day or two
You
to
look
get
at
there.
that.
Yes. So if it gets
You look
back
at
to there,
that,
I need to short
and you
kind
look
of
at
thing.
that. I mean, it's this is 1, 2, 3, 4, 5, 6. That's 7 days. I mean, really, the year started here. So aside from the first 2, 3 days where it wasn't really sure what it was doing, it's just kind of been caught in this area. And look at the bars as well. Look at how they formed. There's so much overlapping here. Inside bar there, and another one here. There's lots of kind of overlapping, really, sort of that we've seen. And this is when I look at it, I think, okay, well, the information here is to state not on the short-term timeframes, to be fair, George, but on the longer-term timeframes. This is basically saying you're going to need to wait until there's some genuine kind of movement here and breaking out of some of these areas, because the market doesn't really know what it's doing at this moment in time.
But as long as it's got a top and a bottom, that's pretty good for me.
Yeah. Fair.
Yeah. It's sell off the top and buy at the bottom. Yeah.
Yeah.
So that's kind of where I am. I mean, I see we continue to sell off now on the UK 100. If you put that back again, just.
Yeah, so actually a decent move so far, isn't it?
Yeah.
There's that follow through, George. A little bit late.
Follow through. So now I just gotta find ways to try and get in the market.
All right, we better leave you to do that because
but
time is short.
Yeah.
All right, buddy. Thank you so much.
Right.
Lovely to see you back in 2024. Looking forward to catching up physically in 6 or 7 weeks' time, whatever it is.
Yes, yeah. Or 2 months' time, right? 6.
Yeah, I suppose it is. Yeah, it's 2 months, isn't it? I must be getting keen. Simple as that. All right, we're going to call it quits unless anybody's got any questions. Zachariah, you are most welcome. Thank you for being our trading buddy for the day. Hope you can stick around for 2024. That'd be good. Nothing more to add, Ash?
Nothing more to add, mate. No. Yeah, I think decent chat, but yeah, I'm waiting right now. I'm just waiting for some other information. I see this one has now broken out, and the FTSE does actually look quite bearish. This is one that sort of is looking a little bit under some stress, but I can't help seeing this up here on the weeklies and suggesting that last week was a hold, and this might pop down and pop right back up again. I'm interested in the long with the FTSE, actually, not the short. But you know, people are flushing out right now, so I'm just going to wait and let that happen.
Yeah,
Cool.
there's a question here. I just put up the 5 minute again on FTSE.
Sure.
So this was just before 11. With the last two 5 minute candles, we consider the possibility of an entry due to continuation. So I mean, it's pretty bearish now. So what I would wait for is another pullback. Okay, so if the market pulls back, if you had the 10 EMA there, if it pulls back to test the 10 EMA, then look for a decent enough reversal pattern, whatever you want to trade there to jump in. I wouldn't jump in now. If you jumped in now, your stop has to be just above that lower high, above the bull candle, you know, above the 1, 2, 3, fourth red candle. But it's probably better just to wait a little bit. Yeah, so I would wait a little bit for a pullback to see if we can get in. Because if it's bearish now, chances are it might be bearish for the rest of the day. So best to wait for a pullback. If you are comfortable to hold through a pullback, that's fine. Sell, but your stop is still quite far away. That's at the beginning of this second move. Yeah, if you, I personally am not comfortable holding a stop that far. There's nothing wrong with it. It's just that I don't know how long the pullback might take before we get continuation. Rather wait for the pullback, because that might give you even a better stop level, not as far away as where we are currently. Yeah.
Okay, makes sense to me.
Bearish, yeah.
All right, mate. Thank you very much for coming in. You've got a show on Friday.
Yes, 12:30, 6:30 Sing. Yeah, 15 minutes. Whatever trades are active at the moment or anything else that I've seen in the charts that's worthwhile for the guys.
Brilliant. Guys, you can catch up with George then Friday at 6:30 Singapore.
Yeah.
Ash, have a great week, mate. You too, George.
Thanks, guys.
Take care. Appreciate it. See you next week.
Thank you, everyone, for being our trading buddies. We shall catch you next Monday at the very same time. Have a wonderful week ahead. Bye-bye for now. Uru.